What if the same technology that made Meta one of the world's most powerful companies is now becoming its biggest financial risk? What if the billions Mark Zuckerberg poured into artificial intelligence are no longer an investment, but a liability? And could Meta's stock, once touching record highs, now be heading straight towards $700 or even lower? This week, the cracks in Meta's AI empire have started to show, and Wall Street is watching nervously. I'm Osama, and you're watching Scop AI. Wherever you are in the world, if you want real insights into how tech, money, and power collide, make sure to subscribe and continue this video. After months of unstoppable growth, Meta's rally has suddenly crashed. In just 1 week, the stock has fallen over 15%, wiping out more than $200 billion in market value. From its record high of $796, Meta has now tumbled below its 50-day moving average, signaling a critical technical breakdown. Investors are asking, has Meta's AI dream gone too far, too fast? The answer lies in its latest quarterly report, one that revealed both brilliance and breaking points. On paper, Meta's third-quarter results looked strong. Revenue jumped 26% year-over-year, driven by strong ad demand and growing user engagement. But behind those numbers, the reality was brutal. Earnings per share collapsed to just $1.05, far below analyst expectations. Why? Because Meta's AI ambition is burning through cash at a record pace, and a massive $15.93 billion tax adjustment hit profits like a hammer. Even though Meta called it a one-time event, Wall Street saw something deeper, costs rising faster than growth. So, Meta's AI vision isn't small. It's actually rebuilding the company's entire infrastructure, from these massive GPU data centers to next-generation AI compute systems. But you know, that kind of ambition comes with a pretty hefty price tag. Capital expenditures are now forecast between $70 and $72 billion for 2025. Honestly, that's one of the largest in tech history. That's even higher than the tech budgets of entire countries. And if we're talking full-year expenses, well, those could reach up to $118 billion. Meta's message was clear. AI will define our future, but investors heard something else. That AI might just destroy our margins. Operating income rose 18% to $20.5 billion. But at the same time, total expenses soared 32%, reaching $30.7 billion. Operating margins fell to 40%, which is down pretty sharply from previous quarters. Even with record ad engagement, like 3.54 billion daily active users, 14% higher ad impressions, and a 10% increase in ad prices, Meta's profits are getting swallowed by its infrastructure bills. It's honestly a strange moment for Meta, where the company's core business is thriving, but its AI ambitions are kind of crushing its returns. Zuckerberg's bet is simple: AI will pay off long-term. He believes that Meta's models, powering platforms like Instagram, Threads, and WhatsApp, will redefine social media. But in the short term, it's creating a paradox. The more Meta invests in AI, the less profit it shows, and investors are losing patience. Many recall the metaverse crash of 2022, when Meta's $10 billion bet on virtual reality burned shareholders. Now AI could be following the same path, just with higher stakes. Analysts are split. Some see this as a buying opportunity, a temporary dip before another rally. Others call it a red flag, warning that Meta is entering a new spending trap. The technical charts show the stock breaking key support at $750, with the next level near $700. If it slips below that, momentum could trigger further declines. Goldman, Morgan Stanley, and Citi have all revised their short-term outlooks, focusing not on growth, but on spending discipline. So, what's next for Meta? If AI investments begin paying off by late 2026, this could look like the perfect long-term setup, a dip before dominance. But if the cost spiral continues, Meta could face its toughest year since the 2022 crash. Zuckerberg is betting on the future, but the market is demanding profits now. And as the world's second-largest digital ad platform burns billions on AI infrastructure, the question remains, is this innovation or insanity? Meta's third-quarter results have revealed more than just numbers. They've exposed a battle between vision and viability. The company that helped build the modern internet is now fighting to survive the AI age it helped create. I'm Osama, and this is Scop AI. If you want to stay ahead of the market, where data meets power, subscribe now, and I'll see you in the next deep dive.